Hey YouTube, Randall Cornett here. Hope everybody had a great day. We ended our 8th day in a row in the green on AMC stock. There's a few things that I wanted to go over, and we're just going to jump right into it. Number one, there is a new ruling that could lead to margin calls. We're going to cover that. Probably that'll be my second topic in the video. And then I wanted to adjust something that from my previous video yesterday that I got incorrect. I'll always own up when I'm wrong, and I wanted to share how I was wrong and give you guys the correct information, and then also dispel a little bit of fear that some people may have, being that some of these hedge funds are now taking long positions and what we can expect out of that. That being said, we'll jump right into it. So we already know yesterday the news was that, you know, we had hedge funds like Citadel jump in long on AMC. They have, and I'm going to just bring the screen up here. They have basically yesterday they did 4.1 million. Well, actually, let me just step back a second, guys. So what I got wrong yesterday when I reported my video is when we were talking about the call options that they had put, I had took this number as that they have 4.1 million call options, but in fact, that is not the case. So according to Fintel, this number is actually just the amount of shares they get with their call options. So it's actually their call options equal 4.1 million worth of shares. And this number is not 4.1 million worth of call options. You can actually see that by the value here. So this is the value of the position, and it shows 41,963, and that's times 1,000. So that puts us at right around 41.9 million. Okay, so clearing that up, I apologize for that, guys. But moving on. So how are they going to use these shares that they've got, their position, to basically manipulate the market and scare us? Is what they'll do is they'll release these shares, right? These shares that they have now, and they can exercise these contracts, or they can do all kinds of different things with these. But what the main focus that I want to say is that they're going to, don't be surprised if there's some nasty sell walls, especially as the price starts to increase, because we're on the right trajectory, right? The squeeze is coming. I don't want to say the war and battle's already won, but the squeeze is happening. Now, how high it gets is going to rely on us, you know, and how well we diamond hands it. But that being said, expect that these shares get unloaded in the market to manipulate the price, right? They're going to, especially if we start getting up and we think, oh, this is a squeeze, this is a squeeze, especially if this is happening before June 2nd, when we have a real idea, when the second vote comes through, we have a real idea of what our, you know, our synthetic, what our share count is, and we'll have an idea of how many synthetics are out there. I assume they're going to unload these shares, and probably already been doing it. Remember that 13Fs are just the filing date. So this Citadel Advisors call was actually was effective the 31st of March. So even though they filed on the 17th of May, they've had these shares ready to use since March. So they probably already have been using them or saving them to use them as ammo. So expect that they're going to drop them in, especially as we start climbing towards the squeeze, especially if it starts happening and people think that that's the peak and they start, you know, artificially selling down. I want you guys to be prepared for that. You're going to know when we squeeze, and I feel confident. I'm not a financial advisor, but myself, I'm confident that we're going to see at least, you know, the digits that we're expecting in the thousands for sure. So that being said, don't settle for anything less if you can control it. Obviously, everybody has their own situations, and if you have a number in mind that works for you, by all means, I give you all the power and credit in the world. But just understand that we are going to see an attack from these guys, most likely, that's going to try and dictate the price. So expect those shares to kind of be used in a way against us. And I want you guys to remain strong and know that if there's any talk about the squeeze happening, unless the majority of the community, the guys that you follow, the people that have been in this, the OGs, are kind of jumping on that train, I would expect everything to be just kind of us trying to scare us out of the market. So I want you guys to be prepared that that's going to be used against us. And although they do have long positions, and even some, like in Susquehanna's case, they have more long positions than they do short. So that is a bit of a hedge, but just expect that they have a lot to gain by the stock going down as well, as so do their friends. So expect, you know, some heavy game planning on using some of those shares against us, and just remember to stay strong. This is more or less just like a public service announcement to let you guys, hey, stay calm, know that this is going to happen, know that they're going to pull out all stops. I mean, it's really just what they've already been doing. We just might see it at a different magnitude as we're getting closer and we're seeing more price action positively. Well, I could see them spinning this around like, hey, there's squeezes happening, you guys. And then we start seeing these massive sell-offs, and it will all just be them basically trying to fabricate it. So that being said, that's pretty much all I have on that. I just wanted to kind of dispel some of the fears that you guys might have when it comes to what these guys are using with these shares. Moving forward, I wanted to give you guys a little bit more relief is kind of the purpose of this video. So S3 data is a, they're kind of like Ortex in a way. They do short interest. I'll just read this actually for you guys. So S3 short interest and securities finance data provides, let me come actually switch this, provides, where was I at here? The necessary tools to view how short interest finance rates and crowded trades affect price action. It delivers the only real-time and most accurate short interest analytics and identifies crowded long and short trades. S3's data provides transparency to the true spread of the borrow/low market with the only independent and unbiased bid, offer, and last rates for securities finance. S3's data is a market standard due to its holistic, inclusive, and unbiased data collection and contribution methodology. All right. So one of the main guys, and you guys have probably seen him, his name's Ihor. I don't want to, I butcher his name. I should ask him how to properly pronounce it, but he's a really good dude. And he spends a lot of time giving us information on AMC. So what I did is I reached out to him just to get a better answer of what we're looking at in terms of borrow rates dropping. So we've been seeing borrow rates drop and a lot more shares are on loan. And this is pretty much when what he's saying. So shorts are buying, they have to buy shares to cover their position, just to deliver, so they don't get a failure to deliver, just to basically cover their short, right? So shorts buy to cover and return their borrowed shares on settlement date. The lender can now relend them. So they're getting the shares returned to them and then they're putting them back out to relend. But as there is less overall street demand for these shares currently, they need to lower the rates in order to make their shares more attractive to borrow than other lenders of those shares. So there's actually a competition now going on between these lenders. So what they'll do is they'll lower the borrow rate, and they'll even basically, how do I say this? They'll lower the borrow rate and to make sure that, to make it more enticing for somebody to come and borrow. Why this is good for us is because the shares are not getting borrowed, which is meaning that indicates to me that the shorts are not taking them because they realize it's a huge risk actually taking short positions right now. They think that they're going to lose money, which is why we're seeing the interest rate drop down and we're seeing the, borrowable shares still stay at the, $1 million plus. It's because they're simply not doing it. They're basically admitting the fact that if they take these short positions, that, it's a huge risk, which is why they're kind of stagnant at this point. And another thing on these, basically these lenders loaning the shares, I know that at some points they can even pay an interest on the collateral that like the borrower is putting out. They'll pay an interest on that to entice them to borrow through them even more. So remember, going back to Citadel, Susquehanna, these different companies, they stand a lot to gain by, lending these shares out, as well as having positions both on the long side of it and the short side of it. So they're definitely winning on all bases, or trying to win. The problem is I think it's a little too late. I think they have too many shorter positions now, where it's at this point it's just damage control, like how they can not get bankrupted, right? So that being said, I think that that's pretty good news for us. I want to mention again that this is S3. You should check them out if you they have a free trial. I actually don't know if they have a free trial, but you can inquire about using their services because their data is pretty freaking awesome. And then moving forward on to the new ruling that just came out. So there was a new ruling that passed today that could lead to margin calls. Okay, it's the SR-ICC-007, like GoldenEye 007. Okay. And what this is, and I'm not going to read the whole entire document. I know that you guys are all capable individuals and, know how to read. So, but what I did want to highlight is through some of these, how do I say, these rulings, they're getting stacked, right? They're coming out, boom, 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 one after the other. And this particular one has to do, these guys mediate between banks and the funds, right? So these guys are like the middle, they're like the referee. And they're getting really weary of the high risk these hedge funds are posing to themselves, right? And so basically what this ruling is saying, and listen up because it's important, and this is one of the bigger rules in my opinion, that based on the ruling, if the account's updated margin, so they use the term haircut, exceeds the account's capital, the broker can either margin call them or force liquidate their positions until the margin no longer exceeds the capital. So the ruling, it's basically, it updates the collateral required for these over leveraged positions. So they're going to have to shell out the money, right? They're required to have a certain amount of capital if they're in an over leveraged position. So they're further mitigating risks in addition to what they put into the 005. These regulators are really done. They're not having this anymore. And so as we get closer and closer to the squeeze, I think we're going to see more and more of this. They basically stress market conditions. They're going to continue to collect sufficient collateral from its members, and that such collateral could be liquidated in a timely manner to meet financial obligations as a central counterparty, mediator between banks and hedge funds. So they're just basically increasing the collateral requirement. And if you don't have it, they're going to margin call your ass. So to me, and I almost want to smile like a little girl because this is big stuff. We are headed in the right direction, guys. Again, be expecting that they're going to use these shares against us, these hedge funds. But I think we're on the downhill stretch, and we're near the finish line. And with that being said, I'm going to end the video here. It's been a crazy day for me personally, just on my work side of things. So this is kind of a stress reliever for me that I'm able to kind of come and do this for you guys. I hope that you enjoyed the content. Please do me a favor, like and subscribe. And I'd like to continue doing this for you guys. It's been an absolute blast. On my last video, I think I just hit 1,000 subscribers, which I wouldn't think that I would ever do in my wildest dreams. So appreciate you guys very much and enjoy the rest of your day. I love you guys a long time. Peace.